Energy prices jumping today. WTI crude soaring more than 5%. Traders betting that OPEC Plus will cut production by more than 1 million barrels per day. It's the biggest cut since the start of the pandemic. If it happens, our next guest believes the fallout could be especially bullish for energy prices. Patrick Haan is GasBuddy's head of petroleum analysis. Patrick, thanks for being here.
Good to be with you.
So, Patrick, last time I talked to you, and I actually spoke during the Colonial Pipeline issue where gas prices surged because of that whole issue. We're not going to do a history lesson, but I want to talk to you about OPEC Plus, their production cuts. You actually believe it could reach, those cuts could lead oil to reach $100 a barrel. Explain the thesis here, because right now we're about, what, $85 a barrel?
We certainly are, and keep in mind how tight global inventories remain. There's been much said about an economic slowdown, but keep in mind, even the U.S. SPR, just that alone is 180 million barrels of potential future demand as the administration is going to have to refill that. Global inventories, like I said, of crude oil remain extremely tight. A lot of that still because of a rather brisk year for consumption. That is a return to pre-COVID levels, or at least very close. So I think OPEC is certainly very much ahead of this, but of course, they're doing this likely to stem the recent decline on the concern that there could be a protracted long economic slowdown.
So we're talking a lot about an economic slowdown, but in reality, China hasn't fully reopened yet. How does a fully reopened China change this narrative?
Well, as you mentioned, China's been shutting down, seems more often than not in the last few months. And so Chinese demand has remained relatively muted. But once China starts to reopen on a more permanent basis, you can expect their oil consumption certainly to go up, very much like we saw in the U.S. last year, when American motorists that had cabin fever really saw demand go up significantly. So that is certainly something that could happen in China as they reopen. And that is something that could keep oil prices going up as we approach the end of the year. Keep in mind as well, Russia's invasion of Ukraine, oil being used as a replacement to natural gas production and to heat homes. So certainly moving into the fall and winter, I think oil is going to have more strength than what we've seen in quite some time.
Yeah, Patrick, I agree with you. I think, listen, the crude move has been interesting from 135 down to levels we saw a week or so ago. We're bouncing now. And so much of that sell-off, to me, has been people front-running potential demand destruction on the back of everything we talk about, slowdown globally, all that stuff. Problem is we haven't seen that demand destruction. At what point do people say, you know what, that demand destruction isn't coming, and your scenario plays out?
Well, exactly to your point, you know, there's been a lot said that gasoline demand is really going to soften up, that we're starting to see the onset of an economic slowdown. But looking at GasBuddy data, gasoline consumption last week actually rose close to 2% week over week. Now, a lot of that could be because of Hurricane Ian, but again, a lot here. Consumers are not really slowing down. Keep in mind, even as California prices have now exploded to over $6 a gallon, we're not seeing much of a slowdown in consumption. So the risk is that we're not going to see the typical fall off in consumption, and that OPEC's cut could exacerbate tightness in inventory seen globally.
Patrick, it's Karen. Thanks for coming on. Is there any chance that there could be any kind of a supply response from the U.S.? Are we going absolutely all out, or is there any room there?
I certainly think there is room for potential for U.S. drillers. In recent weeks, as oil prices have sagged and been under pressure, we have seen the rig count respond by slowing down. So I still think there's some room for improvement. Oil producers likely a little bit more pessimistic as oil prices have fallen. But keep in mind, if OPEC shuts the door by cutting production, that could open the door for U.S. drilling going into the winter and spring.
All right, Patrick Haan, GasBuddy's head of petroleum analysis. We appreciate you being here. Thank you.
Thanks for having me.
All right, let's trade it. We just heard what Patrick broke down, Dan. I mean, what's your take? Is oil just fundamentally going to have to move higher just because of what we're seeing from the cuts? And then, of course, over in Europe, they're going to need more energy as we go into the winter.
Yeah, I mean, listen, we've spent a lot of time talking about natural gas and what that could mean for the European economy in general here. You know, the crude oil thing, especially as we've gotten through this supposed summer driving season, everything, this one's a little bit tougher to me, especially when we have China and the fits and starts that we've seen over there with kind of the lockdowns and what that economy is doing right now. I'm just not particularly bullish on oil right now, especially if everything that we've talked about so far really speaks to a weakening U.S. economy, which is right now doing far better than almost every other developed economy in the world. So to me, I'm not looking to play oil here from the long side. I'd rather look to see some things that massive secular shifts are taking place, whether it be technology, and I can look out 1 or 2 years, and I think there's been some sort of like generational resets or so, whether it be on valuations or whatever. That's what interests me. Playing oil right here, listen, pre-pandemic, we all thought this was a dead bang loser for the most part, right? So I just don't know why this is one I want to come back to right now when we are not in the roaring 20s.
So, Karen, really quick over to you. I was talking to some of you guys earlier. I mean, is this potentially a case where the U.S. consumer comes back in and starts spending a lot more money on gas, just driving for the holidays, heating homes and things like that, that might also be a reason for prices to continue to spike?
Was that to me, Frank? I couldn't hear you.
Karen, to you. I'm sorry.
Yeah. It depends. It depends how everything else is going, where rates are, where other inflationary commodities are, and whether they're employed. So I don't know. I don't have a lot of clarity there.
All right. Fair point. Fair point. I think a lot of questions about gasoline demand here in the United States and also heating when it comes to the wintertime. We have a mild winter or severe winter. Just have to wait and see on that one.